Are SPY and QQQ about to have a blow off top, or will multi-year resistance hold up once again and force the markets down? Big tech is showing exceptional resilience, but will it last? Stay till the end because we're going to be covering market-moving patterns on numerous tickers, including a pure-play tech foundry company that appears to be currently breaking out, with a roughly 150% upside potential. As always, I'm not a financial advisor and nothing I say is financial advice. The views expressed in my videos are just my personal thoughts and opinions. Welcome back, cool cats. I can't say thank you enough for all of my new subscribers. I asked and you more than delivered. What I really want to focus on, since we have many new viewers, is what's going on in the markets and where they could be headed. I believe wholeheartedly that some crazy things are about to happen in the markets, and I want everyone to be prepared. Starting on SPY on the daily time frame, it's been months since we last covered this pattern, but it's time to revisit it. We had this multi-month ascending triangle. You might argue that it's a symmetrical triangle, and it was a symmetrical triangle on QQQ, and we'll show that in a minute. This is targeting about 621 to the upside. Now, we had so much resistance overhead that it wasn't able to play out fully, but I'm genuinely wondering what's going to happen once that target gets met, because there does not appear to be any other patterns pushing the markets up. Will we break this main red resistance line in a final blow off top, then watch the multi-year rising wedge pattern finally play out, or will we just keep pushing higher if we can confirm previous resistance as new support? I could see an actual scenario where we continue to bounce between the main blue support line and the red resistance line. There's a multi-year levels. We could potentially come down and hit somewhere around like 593 to 594, come back up, hit about 612 to 613, and just keep bouncing back and forth. Zooming in on the 4-hour time frame, we could see this sideways channel here in light green. We broke out of that, and then we moved up into a smaller range consolidation channel here in yellow, which we broke resistance on Thursday, February 13th, after PPI components came in a little softer than expected. And since those feed into core PCE, the Fed's preferred inflation gauge, that increased the likelihood of another rate cut this year. But if we zoom in on the 1-hour time frame, I don't think it's just a coincidence that we appear to be forming a rising wedge right up into this main red resistance line. If we quickly switch over to SPX, we can see a similar structure. It was in this bullish ascending channel here in orange. We had a nested rising wedge pattern which broke it down a little bit, and near the end of the day on Friday, we actually broke this main support line. Back to SPY. If resistance holds and this pattern plays out, it's targeting at least about an 8-point drop to the downside. And if I throw up all the indicators, look how this could drop and potentially place us right at 1-hour strong support, both of the Ichimoku cloud and the 200 simple moving average. And if we zoom out to the 2-hour time frame, we can see it would clearly be going right into that Ichimoku cloud support. And without a major negative news catalyst, there's no reason to suspect this would be anything more than a retest of support. However, the longer I do this, the more I find that economic, earnings, and stock rating catalysts get conveniently released right when we hit key levels. If something negative gets released, we could see SPY try to head all the way back down to the main support line, right around 594, give or take, where it would meet with this other key level right here and likely provide a key buying opportunity. And just quickly zooming out to the weekly time frame, I cover this basically every other video, but notice this RSI pattern. We broke below support there for 1 week, then we clawed our way back up. But I'm not ruling out the possibility that this ascending triangle pattern, which often tends to be a bearish reversal pattern, still plays out in the weeks or months to come, leading to a major correction on SPY. And even zooming in on the 5-minute time frame on Friday, we could see this symmetrical triangle pattern that formed. I'd like you to leave the comment down below if you know what that pattern target would be. And if you're loving this analysis so far, please don't forget to like, share, and subscribe. And if you tap those notifications, you won't miss any market moving updates. Moving on to QQQ, I'm actually starting out with a pretty cleaned up chart on the 1 hour time frame. I'd previously covered it was in this basically sideways channel here in light green. We broke out, came back, and then formed this symmetrical triangle pattern right here in yellow. We've actually got to zoom out to the 4 hour time frame to even see it, but this pattern is basically targeting about 559, let's say maybe 560, let's round it to the upside. And initial breakouts on symmetrical triangles are always the most explosive, but then there's often a pullback or retest before moving higher, usually around the halfway mark, which we seem to be getting pretty close to. Zooming into the 15-minute time frame, we can see that we're forming a rising wedge here in orange, right up into previous all-time highs. And we can see this nested rising wedge pattern here in purple that began to play out, but it met the more significant support line below. Just barely, but price does appear to have broken this support line here already. If we switch over to the NDX, the NASDAQ 100 index, we can see even more clearly just how clearly this is a rising wedge pattern that's targeting basically about a 200-point move down. Back over on QQQ on the 1 hour time frame, I want to throw up all the indicators again. Notice here how the Bollinger Bands have contracted, indicating the next market day is likely going to have an explosive move. And the pattern target for this rising wedge is roughly about 8 points to the downside, which would also place it right at strong 1 hour Ichimoku cloud support and between the 100 and the 200 simple moving averages. Notice how eerily similar this is to what we're seeing on SPY. And if we zoom out to the 2 hour time frame, we can see that would also place it perfectly at Ichimoku cloud support, at the bottom Bollinger Band, and near the 100 simple moving average. And if we zoom out just a little bit more, we can see it would actually place it just above this previous strong resistance line, which could now act as support, right around 529. I have long said that NVIDIA is the leader of this bubble, and I've been covering it for months. You have to zoom out years to see it, but this massive rising wedge pattern is targeting a drop to roughly 9650, which just so happens to be very confluent with this key level right around here. NVIDIA already broke this main support line in green around 141 a share, and it began a sharp drop all the way down to 113. Now, if the rising wedge is playing out, this actually is likely a dead cat bounce, and we may see NVIDIA begin to sell off once it fills this gap. A likely area to potentially reject would be around 146 to 147, which would be meeting up with this previous resistance line here in yellow, if it can get that high. On the bullish side, if this keeps pushing up, it will likely struggle with this main previous support line around 152, which also happens to be near previous all-time highs. If you're going to trade, I feel like you have to keep an eye on Dixie, the dollar strength index. I called out this multi-week rising wedge on Dixie before it broke out. And this thing started on 11/22/24 and actually finally broke down on 1/20/25, if that shows you just how significant this thing is. And it's still targeting about 105.80 to the downside, which is confluent with this major level right here. And generally speaking, a falling US dollar is tailwinds for equities. Zooming into the 30-minute time frame, we can see this very clear rising wedge that formed from 2.6 to 2.10, which started breaking down on 2.11. Then on February 12th, we got those hotter than expected CPI prints with month over month coming in at 0.4% versus 0.3% expected, and year over year at 3.3% versus 3.1% expected. But here's the amazing thing about technicals. The dollar was never meant to be up there because this previous pattern was targeting 107.50. And look how once we hit that, we got a bounce and started this descending channel, which there actually appear to be nested channels. We have the one channel going down very steeply in blue, a lesser bearish channel here in yellow, but the steepness of this channel explains why the markets just keep pumping. We closed Friday at 106.79, meaning that if this much larger pattern is legit, we only have roughly 1 point left to fall, at which point Dixie is likely to bounce sharply off of support. And zooming further out on the daily, even if Dixie headed a little bit lower, there is this key descending resistance line in orange around 105, which actually matches up with a previous key level as well. That could, at minimum, lead to a short-term rally in the dollar and possibly even a reversal back up. And just look how significant this level is. It was so difficult to get above that when we finally did, we moved up very impulsively. And if we throw up all of our indicators, look how that level is also confluent with the 100-day simple moving average, as well as Ichimoku cloud support, plus the lower Bollinger Band here would be way overextended, and the 200 simple moving average lines up perfectly with this main orange support line right around 105. If Dixie starts bouncing sharply off of these levels, I would absolutely expect the markets to go red. And zooming out to the weekly, if you're new to my channel, you may not have seen this before, but if this massive bullish falling wedge here in yellow is actually playing out on a weekly to monthly time frame, it's still targeting somewhere around 111.70, maybe 112, which would put it right up into this supply zone. Taking a look at the VIX on the 4-hour time frame, I want you to check out this 1450 to 1550 range. Every single time the VIX has gotten down back into that demand zone in the past couple of months, it's spiked pretty aggressively. And look where we're at right now. Now pay close attention to this descending resistance line here in purple. Depending on whether you want to chart it so that it touches all three peaks here, here, and here, or if you wanted to move it so that it was just touching the wicks here, it's basically indicating that fear could break out within the next 2 to 4 days. And it's forming this descending triangle with a breakout or breakdown target of at least 8 points in either direction. And those targets can often overshoot on the VIX. Zooming out on the daily, look at this thick upper red resistance line and this lower green support line. What is that forming on a multi-month basis? If you guessed massive falling wedge, you guessed right, indicating that at some point the market is due for a massive correction. We have to zoom all the way out on the weekly time frame to even show it. If the descending triangle were to break to the downside, it would be targeting a VIX of roughly about 7, which would be breaking so much support, and it would be the lowest that the VIX has ever been. If that were to happen, I probably don't need to mention that the markets would probably go parabolic and liquidate the bears. Zooming back in on the 1-hour time frame though, however, notice how if this were to break to the upside instead, the target is confluent with this upper red resistance line and this key level between about 22 to 23. And since the VIX is mean reverting, if it got all the way up there, it's much more likely that the market would bottom out once we hit it. If you follow my channel, you know that I love my market breadth indicator, the ADD. This main upper resistance line here in light green and the lower main support line in green appear to be holding up so far. Other than a few wicks, they seem to be holding up, and the overall market broke out of this bearish channel in blue and was forming a symmetrical triangle here in purple. And this could indicate that the markets want to break out in one direction, but we can't forget the higher time frame resistance and support here, which is why I've been saying that volatility is likely to continue to ramp up. And it's likely that the market wants to break out, but there seem to be overarching factors preventing that from happening. The pure play tech company you've been waiting for is SkyWater Technology. Shout out to @Emma the Dalmatian for first pointing this ticker out. His channel is full of adorable videos of his amazing Dalmatian Emma. Link in the description below if you're interested. When we zoom in on the 1-hour time frame, we can see that it was inside of this short-term descending channel in blue for multiple weeks. But see how it's got this nested, even wider descending wedge. It hit near this demand zone, and on Friday we actually broke resistance on this channel and appear to have already retested it. If this pattern plays out fully, then what we can expect is for it to target at least 15 to the upside, potentially about 1570 to 16, which if we zoom out to the weekly, we can actually see that would be confluent with this upper resistance of the much more significant weekly channel here in orange, and confluent with this major key level. If it can't break through, that would likely be an excellent short opportunity at that point. And quickly taking a look at the investing.com economic calendar. Tonight at 1850, we've got Japan's GDP coming out, which could potentially affect the yen. Obviously, Monday is a holiday. Then on Tuesday, President Trump is expected to speak. On Wednesday, we can look out for the FOMC meeting minutes around 2 p.m. Thursday, we've got initial jobless claims and the Philadelphia Fed Manufacturing Index coming out at 8:30 before the bell. Then on Friday, we've got the S&P Global Manufacturing PMI, Services PMI, and existing home sales. But what I'm interested in is coming up next week. So the following Monday, we've got Eurozone CPI coming out, which could affect the euro, which could affect Dixie. On Tuesday at 10 a.m., we've got the consumer confidence numbers coming out. On Wednesday, we've got new home sales. Thursday, there's durable goods orders and GDP. And the main thing I'm waiting for is on Friday the 28th, we have core PCE month over month and year over year coming out at 8:30 in the morning before the bell. And this is the Fed's preferred inflation gauge for trying to decide, are they going to cut rates or are they going to keep things steady, or as some people dread, even raise them? Then last but not least, we're taking a quick look at Moomoo's earnings calendars. There's not a whole lot going on this week in terms of earnings, except perhaps on Thursday the 20th. We've got Walmart, Alibaba, and Booking Holdings coming out. Walmart and Alibaba coming out before the bell, and then Book is coming out after the bell. But the following week on Wednesday the 26th, obviously there were some other earnings that are going on, you can see here, but the one that is going to make or break the market, I believe, is NVIDIA's earnings, which are going to be coming out after the bell on Wednesday. So watch out for that one. And I want to wish everybody the best of luck, cool cats. God bless. And without further ado, here is this week's trading rule to live by.